What is going on YouTube? In today's video, we're going to be talking about how to trade options for beginners. Now, if you don't know what an option is, you're robbing yourself. You want to stay around and watch this whole video because options can and will change your life if you learn them and take the time to learn them. It's not going to be easy, but what in life comes easy and is worth reward without a little bit of hard work? But before we get into all that good stuff, my name is Tyler. If you did not know, hit the like button and the subscribe, and I encourage you to stick around a while. You will learn a thing or two. If you do not learn a thing or two, open your damn ears and pay attention. Now is your time to shine. 2021, I don't care what happened in 2020, 2019, none of that shit matters. It's 2021, and that's being real. You have the power to change your life today, not yesterday. If you did yesterday, cool, but if you didn't, today is your day. I don't care what background you come from. Because me personally, I come from a rough place, probably worse than 98% of you guys watching, and that never stopped me, and I would not let it stop me. Wow, guys, that was a hell of a rant. I was really getting going for a second. That was pretty heated. So if you're still here and I did not scare you off, we are going to get into the point of this video, and that is how to trade options for beginners. Now, the biggest and most important thing to understand when options trading and learning about options is essentially, what is an option? An option is the right to buy or sell 100 shares. Now, one options contract represents 100 shares. To buy or sell 100 shares at a certain strike price. Now, a call means I think of it as you're calling on the stock to go up. Now, a put is you're betting that the stock goes down. Point, you guys might be asking yourself, what's the real purpose of calls and puts? And the real purpose is to hedge your position or to make passive income if your company or your stock does not pay a dividend. Now, rocket companies, Rocket Mortgage, Quicken Loans, all that, you probably heard of it before. They do a lot of advertising, but basically to make passive income while holding the stock, because I want to hold this stock for a long time, so I don't want to sell it. I'm actually down 2.27%. So what I can do is I can go to trade RKT options right on Robinhood, and then you can do this on any. Let's say you bought Rocket Mortgage at $20. See, that's the key, especially when selling these or writing these, is you do not want to sell it under what you bought the stock for, because this strike price is what you would be forced to sell the shares at, because you own 100 shares, so you're agreeing to sell your 100 shares in hopes, these people are hoping, whoever are buying these, that it goes over their strike price by a significant amount, and they would make a lot of money. So that is called selling a covered call. And I was on buy this whole time. You actually want to be on sell. And then let's say the February 5th, so next week, next Friday, if I wanted to agree to sell my 100 shares at $22, then, which wouldn't make sense because I paid $22.07, so I would still be negative a little bit. I would make money, but it wouldn't make sense. But just for a reference, you agree to sell your 100 shares at $22. So, and you would collect the $87 right away. Boom, put in one order. And it says I don't have enough shares because I have already done this. And this is a no risk trade. So as long as you sell the strike above what you paid, like I sold the $30 call, I collected $315 cash that day, but I put these shares up unless I buy the contract back, and we'll talk about that in a second. So I basically put these shares up for holds until December of 2021, so almost a full year. Basically was a full year when I did this. And the best part about this, at least selling covered calls for passive income, is worst comes to worst, by December 17th, if Rocket Mortgage is over $30, which it will probably be somewhere around there, I will have to sell 100 shares at $30. So I would still get $3,000 back. I bought the shares for $2,200, so in that case, I'm up $800. But what's even better about that is you collected the $315. So really, my break even on this, or where I would start to lose money, is $33.15. When I say that after $33.15, you would start to lose money. You wouldn't lose any money, like your account wouldn't lose any value, but you would just be forced to sell them at $30 plus the $315 premium. So you would lose any potential profits, but you're collecting money up front. And if Rocket Mortgage closed at $29.99 at December 17th, then I would not have to sell the shares and I would keep the $315. If you think a stock's gonna go up, and most of the time it's better to get more time on your contracts, a year or more, even 6 months is not very long. But the reason you buy naked calls like this, and it's just straight up like this Alibaba $300 call, I've already made this free. I bought 2 at 380, sold 1 at 790. So this is profit. That's why I'm keeping it in case something happens from now until April and it, goes crazy. But anyways, to buy this, look, you just go Alibaba, trade Baba options, and then call, and you'd want to be on the buy, and then want something with time. So we're just gonna keep it on the April calls. And you see, even the $300 call, the one that I have, you just click on it, boom, and it's gonna cost you $630 because this is times 100. So $6.30 times 100, $630. And this gives you the right to buy Alibaba at $300. You are not obligated to buy 100 shares at any given time. You never have to buy 100 shares if you buy a naked call. So that's the beauty behind it. You can leverage 100 shares worth of stock with a small amount. Like Alibaba, that $600 will buy me like 3 shares. Instead, I can buy that. It's riskier because options expire worthless, but if something goes crazy and Alibaba goes back up, then you will make hand over fist, and you are never obligated to buy the shares. Even if Alibaba goes to $350, you do not have to buy the shares. You can sell the option at the last minute of trading on that last day of expiration. The reason somebody would buy puts is to hedge a large position, preferably if you had 100 stocks or more, but it doesn't have to be. Any big position can be hedged and effectively hedged with puts. So if you take a look at what do I have, look at UWMC. This used to be GHIV and it was a SPAC, and I made a couple videos about this one. But anyways, so I bought in at 1093. So if I wanted to limit the downside, and I expected that this downtrend in the market would last until March 19th, right? So you would want to buy a put, and if you bought it at $10, then you would be protected. Anything under $10, you would make dollar for dollar for every penny it fell. So for every penny that UWMC fell, you would make $1. So as long as you had 100 shares or less, one put option would protect up to 100 shares at that certain price. So if you guys remember that a call is the right to buy 100 shares at that certain price, a put is the right to sell 100 shares at that certain price, because essentially if you're selling the shares, it would protect you. But you are not obligated to sell shares or buy shares. Like, you're not obligated to do anything with these naked calls or puts. So that's where you can make a ton of money, and you don't have to own the stock. Now, a cash secured put, and I will show you some right now. Look, I don't have any puts, for example, so I cannot personally show you what I have as far as put wise, because I don't have any yet. I'll probably get some coming into next week, depending how we open for the week and depending how Tuesday is. I will want to hedge my position against any possible downward trends we could be going in. I did not expect Gamestop to happen and cause a market crash, in other words. But you could take something like NEO, and you can buy a put if you think NEO would go down. Now, same thing, you'd want to pick the strike price. Essentially, how long do you think it would go down for? Let's say March 5th, and this is to break even. This where it says to break even, that is how much if you add, right, so with the put with this, so you'd be going down. So if you bought this at 780, you'd subtract, you know, just make it simple, 7.57.5, you subtract 750, then essentially you'd make money after $50. I'm trying to explain this to make sense as best as possible, so bear with me. But just imagine, for simple math's sake, this is $750 and this strike price is $57.5, right? So with a call, you would add it going up, so you'd make money after the premium you paid on the upside. Now this is the reverse, so you want to subtract, you know, $7.80 minus $57.50, and that would give you your break even. For simple math's sake, I'm using 750, so that would be $50. Now if Neo went to $45, boom, you'd make $500 profit, just like that. If it went down lower, if it went to 40, which I highly doubt we'll ever see those numbers ever again, but you'd make $1,000. And so and especially if you have a position in Neo, that's where it's even smarter, a better case scenario to even do it, unless you think just a sharper market downtrend is coming. Then again, there is new situations. If a stock drops, then it would be a good idea to get a put. But you always want to be mindful of the percent to break even, because 15.21% on the $55 call, that's how much the stock would have to go down for you to break even. And you see a $55 strike and a $57 is what Neo is at right now. This break even price is counting the $643 or $6.43. So essentially your break even on this would be $48.26. Ultimately, with puts and calls, they are both great, insanely great instruments to make a lot of money or protect a lot of money. Different situations call for different things, either to protect or go for bigger gains. But with that being said, I think I covered a lot of the basics. I didn't want to make this video super long, but there's so much more that I could say about calls and puts. I feel like I hardly digged or scratched the surface. So I think I'm just gonna make a video for calls, a video for puts, and just a video for different strategies to help you guys. I think I'm gonna make that as a playlist for my records and anybody else that wants to go there for free help all the time on their trading strategies and calls, puts, options, all that stuff, penny stocks, all that good stuff. We're gonna cover all that. But if you guys stuck around to the end, make sure to like and subscribe. There's no reason why you guys have not now. And hit me down below with what your favorite option strategy is and what your favorite stock is going forward. And if you want to throw in there what you think is going to happen with this whole GameStop, Robinhood, and this whole market crash situation, this liquidity crisis that GameStop is making. So if you guys made it this far, do all that stuff. But until next time, guys, have a good one and peace out.